The opportunity in the market right now is incomparable. The market just experienced one of the most brutal drawdowns in history. The Fear and Greed Index hit a reading of 5. That's lower than FTX collapse, lower than the Lunar bloodbath, and currently there's blood in the streets. And whilst most people are panicking, selling their bags at the worst possible time, this is the exact setup that has historically produced life-changing returns. Every single time we have seen this level of extreme fear, the investors who had the discipline to buy when everyone else was running for the exits were the ones who won big. So in this video, I'm going to walk you through my top 5 picks for crypto in 2026. First pick, Potenza or Tau. This is our AI play, and I believe it's the strongest one in the entire crypto AI ecosystem. The intersection of artificial intelligence and blockchain is no longer a speculative narrative. It's becoming the defining theme of this cycle and beyond. And Potenza sits right at the center of it. It's a decentralized open source network where participants compete to produce digital commodities, machine intelligence, computational power, financial predictions, and more, all incentivized and governed through the Tau token. The architecture is built around what they call subnets, specialized marketplaces where miners compete to produce the highest quality outputs, and validators ensure quality. It's modular, it's scalable, and it's already functioning. This isn't vaporware. Real computation is happening, real intelligence is being generated, and absolutely real value is being distributed. What makes this especially exciting for 2026 is the rise of AI agents, autonomous software programs that can trade, manage portfolios, optimize DeFi strategies, and interact across blockchains without any human intervention whatsoever. Potenza's network of competing AI subnets is perfectly positioned to power this emerging agent economy. Instead of relying on centralized providers like OpenAI, these agents can tap into a decentralized marketplace of intelligence that's continuously improving. Tau also mirrors Bitcoin tokenomics, 21 million max supply with a 4-year halving cycle. At current prices around $190, it's sitting at roughly a 75% discount from its all-time highs. For the leading decentralized AI project in the space, that's an extraordinary entry point in my point of view, and for the months to come, a great dollar cost averaging point. Now, that first pick is powerful, but the next one, this is the contrarian play that most people will completely dismiss, and that's exactly why I think it has the most upside potential of anything on this list. The second pick, Zcash. Now, this one might surprise some of you. Zcash is a privacy coin, one that a lot of you might know. And I know privacy coins have been out of favor for a while, but I believe the narrative is shifting, and this time shifting in a major way. And ZEC is positioned to be one of the biggest beneficiaries. Here's the simple thesis. Bitcoin's original promise of financial privacy has been broken. Every transaction on the Bitcoin blockchain is permanently publicly visible. Chain surveillance firms have built multi-billion-dollar businesses around tracking and de-anonymizing Bitcoin activity. KYC is mandatory on every major exchange. Even Larry Fink and Michael Saylor have openly championed Bitcoin's traceability as a feature. For those of us who came to crypto because we believed in financial sovereignty, that trajectory is quite concerning. Zcash solves this. It uses zero-knowledge proofs, specifically ZK snarks, to enable fully shielded transactions where the sender, receiver, and amount are all encrypted. Not sort of private, generally cryptographically private, and shielded transaction activity is absolutely surging, with now around 30% of all network activity using shielded transactions, with over 20% of total ZEC supply held in the shielded pool. Beyond privacy, Zcash is ahead of the curve on quantum resistance as well. Bitcoin's cryptographic security is theoretically vulnerable to sufficiently powerful quantum computers, and implementing a fix would require a consensus-level protocol change, something that's actually incredibly difficult to do on Bitcoin. Zcash's zero-knowledge proof infrastructure is far more adaptable to post-quantum cryptographic upgrades. There's also the political hedge angle. Right now, we've got a pro-crypto administration in the US, but political cycles turn. The regulatory environment shifts, and it will eventually. The demand for genuine on-chain privacy will intensify, no doubt. Zcash is the most credible, most battle-tested protocol delivering that privacy. It's also got some institutional backing. You know, the marginal buyers of this exact cycle, those that actually demand crypto in the market. It's also got serious institutional backing. The Winklevoss twins, Barry Silbert, and Grayscale. And even CZ recently has spoken publicly about the lack of privacy in crypto. When the founder of Binance, the largest centralized exchange on planet Earth, is acknowledging there's a privacy problem, that's a signal probably worth paying attention to. ZEC is currently priced around 260 USD, having traded recently as low as 186, roughly a 75% drawdown from cycle highs that was just last November. For an asset with Bitcoin's supply model, institutional credibility, and the strongest privacy technology in the space, that's a deeply discounted entry point, and once again, a great entry to start dollar cost averaging from. All right, so we've covered AI and privacy, but if you want to understand where the real volume and liquidity is flowing in this market right now, you need to pay attention to this next one. That third pick is Hyperliquid, or HYPE. Now, if you've been following me for some time, you'll know I've been absolutely banging on about Hyperliquid for a while now. I even spoke about it at Australian CryptoCon. And the reason is simple. This project is delivering. Not promising like what a lot of altcoins do, but actually delivering on its promises. Hyperliquid is a purpose-built layer 1 blockchain designed from the ground up for its financial applications. It runs a fully on-chain order book, not an AAM, with sub-second block times and the capacity to handle 100,000 orders per second. Every trade, every order, every liquidation happens transparently on-chain. And the flagship product, the Hyperliquid DEX, has actually even overtaken Coinbase in trading volume on multiple occasions recently. A fully decentralized exchange competing with and beating one of the biggest centralized platforms in the world. That is absolutely remarkable. It leads in volume, it leads in TVL, it leads in fees and revenue across the on-chain derivative space. And now with the Hyper EVM expanding the ecosystem, we're seeing new decentralized applications, TradFi integrations, and even tokenized real-world asset products being built natively on Hyperliquid. The token distribution is also worth highlighting. No private investors, no centralized exchange allocations, no market maker deals. 31% was even airdropped to the community. That's almost unheard of in this industry. Hype has pulled back as much as 65% from its highs, recently trading as low as $20 before recovering to around 28 USD. Our average buy in Imperial Wealth is still sub $10 from early accumulation, and we continue to hold this as a long-term conviction position and believe at this discount even now across the next few months, it's a great dollar cost averaging point. Just for context, the FTX token at its peak reached a $10 billion market cap. Coinbase currently sits above $50 billion. If Hyperliquid continues on its current trajectory, a $20 to $30 billion valuation is easily within reach. From current levels, to me, the upside is substantial.
Just quickly, if you're ready to take your results to the next level, my team at Imperial Wealth Crypto can help. Inside our Crypto Academy, you'll get access to my personal portfolio, strategies, real-time market insights, and the exact plays my team and I use to stay ahead. With our team of analysts monitoring the markets 24/7, we've helped investors catch moves like a coin that's done a 5x in 4 days. If you're serious about accelerating your wealth, click the link below to book in a call with my team of experts and see how we can help. Now, back to the episode.
Now, I know what you're thinking. What about the obvious ones? And look, I'm not going to sit here and pretend the king doesn't deserve a spot on this list, because at these levels, even the most obvious play might be the most profitable. That is, my fourth pick is Bitcoin, or BTC. It's the foundational asset of this entire industry, and I believe every single crypto investor should have exposure to it at all times. But here's what makes right now particularly interesting. Bitcoin is trading at around a $64,000 as of filming. It recently traded low as 60,000, or even 59,800. That's a drawdown of over 50% from all-time highs it set back in October 2025. And here's the thing. Bitcoin has actually decorrelated from traditional markets. Equities are pressing all-time highs, gold and silver have pressed all-time highs, yet Bitcoin is sitting at more than a 50% discount on its own. That kind of dislocation historically does not last. When Bitcoin eventually recorrelates with the broader risk-on environment, the snapback tends to be violent and, best yet, extremely profitable. If you look at every instance in Bitcoin's history where it's drawn down by 50% or more from its all-time high, investors who began to dollar cost average at those levels have roughly a 90% win rate over a 1-year horizon, with an average return of 125%. Those are extraordinary odds that any investor would take all the time in any other financial market. As a result, we're actively buying this dip, with recently purchases as low as 65,000 right around the current price. If we see further downside towards key levels such as 58, 56, even 50 and 40,000, I'll be getting in at these prices. And I've spoken about in the past how $39,000 area is roughly the ETF entry price and a logical floor. And if so, we'll continue to accumulate. But the point here isn't to guess the exact bottom. The point is to start the dollar cost averaging strategy now and build your position while the discount is on the table. On top of that, the structural tailwinds actually haven't gone anywhere for Bitcoin. Spot Bitcoin ETFs are live, BlackRock, Fidelity, and the institutional heavyweights are still offering Bitcoin exposure through their products. And better yet, these ETFs, whilst they are bleeding at the moment, have hardly bled a blip compared to how much they've accumulated. Additionally, there's a strategic national Bitcoin reserve being discussed in the US and in a few other places like Brazil, and the regulatory environment is the most favorable it's ever been. The infrastructure is built and the passive bid is ongoing. As a result, Bitcoin at these levels, in my view, is one of the best risk to reward setups we've seen in years. But here's the thing. If Bitcoin is the king, the next one might actually be the better trade right now. And the reason comes down to something most people aren't actually paying attention to. Well, the fifth and final pick, that's Ethereum, the prince. ETH is currently trading around $1,900 to $2,000 US. It recently went as low as $1,740. That's a drawdown of nearly 65% from its all-time highs. On a relative basis, Ethereum is arguably even more discounted than Bitcoin right now. But here's why I'm actually so bullish on ETH heading into the rest of 2026. And it comes down to one word: tokenization. Ethereum is rapidly becoming the foundational settlement layer for the tokenization of real-world assets. We're talking bonds, equities, money market funds, real estate, commodities, all being represented as digital tokens on a blockchain. And it's not speculation. It's actually happening right now on Ethereum by the biggest names in global finance. BlackRock launched its tokenized money market fund, BUIDL, on Ethereum. It became the largest tokenized money market fund in the world. Franklin Templeton did the same. JP Morgan's Onyx platform has processed billions through Ethereum-based infrastructure. UBS, HSBC, the European Investment Bank, they've all issued or transacted on Ethereum themselves. The tokenized treasury market alone surpassed $1 billion in 2024, with Ethereum commanding a dominant share, and it's now, I believe, up to 15 to 17 billion. The tokenized treasury market alone surpassed $1 billion in 2024, with Ethereum commanding the dominant share. But guess what? By February 2026, we're looking at over $17 billion in tokenized assets on Ethereum just alone. And the projections keep going forward are staggering. Boston Consulting Group estimates tokenized assets could reach $16 trillion by 2030. Standard Chartered forecasts up to $30 trillion by 2034. Ethereum doesn't need to capture all of that. It just needs to maintain its position as the default institutional settlement layer, and the capital flows will be transformative. On top of that, we've now got staking-enabled Ethereum ETFs approved. This is an absolute game changer. It means institutional investors holding an Ethereum ETF aren't just getting price exposure, they're earning yield on top of it. In a traditional finance world where yield is king, that makes Ethereum a fundamentally easier allocation decision for pensions, endowments, family offices, and fund managers. Ethereum at sub $2,000 with this level of institutional momentum behind it is, in my view, potentially a generational entry point to get you started. And if you dollar cost average over the next few months, I'm sure it will be generational. So there you have it. My top 5 picks for 2026. Bitcoin, Ethereum, Hyperliquid, Potenza, and Zcash. 5 assets, 5 distinct narratives: institutional adoption, real-world asset tokenization, decentralized finance, artificial intelligence, financial privacy. Every single one of them is backed by real technology, real usage, and real traction. And every single one of them is trading at a steep discount from its highs. I want to leave you with this. We've seen this exact setup before. 2018, we saw it in 2020, We even saw it at the back end of 2022. And every single time, the people who had the conviction and the discipline to accumulate during periods of maximum fear were the ones who came out the other side with life-changing returns. The fundamentals today are stronger than they've ever been. The institutional infrastructure is developed far more than it's ever been. And the fear is as extreme as it's ever been. That combination doesn't come around too often. If you found value in this video, make sure you subscribe to the channel, hit the like button, and leave a comment below letting me know which of these 5 picks you're most bullish on. I read every single comment. And hey, if you want a full deep dive research report with all of the technical levels, charts, and detailed analysis behind each one of these 5 picks, that's available exclusively for our members, and I'll leave the link in the description below. Until next time, stay disciplined, stay convicted, and I'll see you in the next one.
Thanks for tuning in to Crypto Coach Will. If you got value from today's episode, then make sure to subscribe so you never miss the latest tips to navigate the crypto market. If you're ready to take crypto investing to the next level, check out the links below where you can book in a call with my team of experts. We place strong emphasis on educating before investing in the market, so take advantage of the knowledge they have to share. Don't forget to follow us on socials @CryptoCoachWill, and I'll catch you in the next episode.